Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Emenduri, and I'm joined with a great guest. You're going to really appreciate who I have on the line with me today. Chris Vermeulen, founder of Technical Traders. You see it on his background there, thetechnicaltraders.com. Brilliant track record and great research. He's got a great YouTube channel that's absolutely exploding. And he's become a real source in the investment community because of the research that he puts out. So, Chris, thank you so much for coming on Crush the Street with me today.
Yeah, thanks for having me, Kenneth.
So right on your Twitter page, you actually show that you predicted the coronavirus black swan 1 month before it happened. I think just starting with this crisis really opens up the conversation. I've been doing that quite a bit lately in my interviews. Tell us a little bit about that.
Sure. Well, we didn't know what was going to happen, but we've got a system that we call ADL, Advanced Learning Strategy. And more or less, it takes the DNA of the stock market and it goes back in time and kind of looks at how many times this certain patterns have unfolded and what the outcomes were. And so our system was saying, hey, something really bad in February looks like it's about to happen. And so we wrote this article saying, we think there's a big black swan event. We don't know what it is, but it's going to have a drastic effect on the market. And of course, COVID really just popped up and took hold of the whole economy and the stock market, and it completely corrected. And I mean, you can't really predict what's going to happen, but with technical analysis, you can typically get a little bit of insight that if something good is coming or something bad is coming, because money is shifting from different asset classes back and forth between risk on and risk off. And when there's a big flight to multiple kind of safe haven defensive plays, you know, big money is slowly positioning for something ugly. So there's a few things lining up that gave us that insight. Hey, get ready. February could be a pretty volatile month.
Absolutely. Well, right now, in light of COVID, we have unemployment and bankruptcies skyrocketing. 4,000 companies bankrupt here in 2020. And that's with trillions of dollars. I mean, so much help coming from the government. I mean, right? Imagine if there wasn't that safety net there. So, I mean, talk to us a little bit about that and just how this flow of money is happening in the economy and as it pertains to trading.
Yeah, I mean, I'm across the border. I'm in Canada, and so I don't really know where all the funds are going in the States. But I mean, if the Fed wasn't there, the government's to help protect people, give them salaries, partial salaries, or continue to kind of help fund. I mean, there'd be a huge problem. We've got the same thing in Canada. The government did a report saying they're expecting like 30% of businesses to go bankrupt. That is huge. That is scary. And a lot of those are going to be the mom and pop shops, you know, in North America that really keep the economy going. It's those businesses and those people with families versus big offshore companies that keep the United States really strong. So it's pretty scary that the Fed said they're going to do whatever it takes. They're going to probably keep giving handouts to help hold things up. Hopefully they keep doing that in terms of trying to keep these businesses going, because once, you know, we've already got bankruptcies already starting to skyrocket. But I mean, I think in 3 or 6 months from now, when people just say, I can't hold on to this business and bounce bottom, I need to pay bills, I think there could be a bigger wave of bankruptcies, and it could get kind of, depressing.
So what does that mean for the stock market and what you're anticipating? Because you have this situation where you have businesses, whether they're, being priced for 10 years of discounted earnings or whatnot, 20 years. But then you have the depreciating dollar, which is, it's a dollar crisis. So priced in dollars, maybe the stock market will go up. Anyways, what are your thoughts on this dynamic that's happening? That's really just throwing a wrench in just fundamentals and how a traditional trader like Warren Buffett or investor will purchase value.
It's tough. I mean, in the last year, we've seen almost all the other currencies collapse in value. They've been on this huge downtrend. The US dollar has been working its way higher, and so has gold. I mean, gold and the dollar, they're both seen as, I guess you could say, a reserve currency, a global safe haven play. They've both been going higher. But now with this unlimited stimulus and just trillions just piling out the doors, I mean, that is not good for any fiat currency to print that much and push it into circulation. So it is bearish on the dollar. And if the dollar keeps falling, maybe that will help support the stock market prices. But I mean, something eventually has got to break. I just can't see poor earnings, companies going under, stock market prices really staying higher. I don't think the Fed can actually support the stock market all on their own. I think eventually there could be a big enough tide of uncertainty, economic downturn, that I think big funds are going to be moving out of equities at some point, and it's going to pull the whole market down with it. And gold, I think, should do really well. Precious metals are primed and ready. With a falling dollar would really just take those to a whole new level.
So what does the $1,800 price point for gold, which we're almost there, represent to you? And the reason I bring this up is because we've seen such a depressing bear market in gold, and then just the way it trades. I mean, you know, how many times it hits that 1,700 or 1,750 and comes back, and it just kind of like wears on people to the point where people are not overly enthusiastic about the miners, although the miners are doing great this year. But it's just taken so much confidence to re-enter the gold space. I mean, do you see that really starting to snowball as we get past 1,800 and beyond that?
Yeah, it is definitely a huge psychological level. It feels like it's taken forever to get here. The gold miners, they're starting to show signs of life, and they're on the verge of like really kicking into a full new bull market. But gold is kind of holding things back. And I think it's going to be a break of $2,000 an ounce on gold that is going to change people's mindset. I don't see 1,800, 1,900 really doing it, because all we're doing is testing the 2011, 2012 highs, which is resistance. But if we break those and gold hits new highs, that means there's a new heightened level of uncertainty. People are more confident in gold than ever before. With everything going on, I think that break of 2000 is going to send gold headline news. Everyone's going to start to pile into it. That's going to spark, I think, the tsunami of investors piling in, especially with so many new traders moving into the market this year. It doesn't seem like people are getting into gold miners. And so I think gold breaking 2000 is going to be a huge threshold. It means gold mining companies are going to be making more money per ounce than they ever have before. And it's just a matter of time that those things should just continue to rocket higher, and people will pile into that sector.
So, Chris, it's interesting. Millennials really don't own gold. It's just not a millennial thing. It's not Facebook. It's not Amazon, Tesla, or Zoom. Some of these tech companies, which millennials seem to love and they've done well with. I mean, these companies have really led the markets. So, question, I mean, what is it going to take for there to be a real shift in the mindset of these new traders to say, you know, we are going to invest in gold? I mean, and is it going to be a falling dollar? Is it going to be an inflation issue? Is there going to be a coming to the Lord moment for millennials to understand that gold is an important component of their portfolio?
Yeah, I think it's going to take a little bit of work. I mean, I think it's a different mindset. I mean, to most people, or to at least millennials, I would think that gold and silver and trading gold miners seems so barbaric. I mean, we're in the industry, it seems perfectly normal, and it's a great opportunity. But to those outside of it, I mean, it's who wants to own a chunk of metal and gold and silver? They did that back with horse and carriage years and years ago, right? That's kind of the mindset that I think a lot of people have. I think once they do catch on, I don't think a lot of the new traders are into penny stocks. That phase, I think, is kind of fizzled out. And so the gold miners, like the penny stocks, are actually ones that are like rocketing and really have a high bid, like they're on fire. But once it gets into the mid caps, like the GDXJ, gold mining size stocks, when that sector starts moving, I think we're going to see those new traders really start to pick them up on their radar. And then I think they're going to start to run. I mean, we're so close to breaking out with gold miner juniors like the GDXJ to a bull market. We're flirting with bull market territory. If gold runs up to 2000, I think that'll be enough for the gold miners to actually break and start to extend to the upside in a big way. And once that momentum starts, these new traders love to trade momentum. Like you said, anything moving fast, which happens to be tech stocks right now, they want a piece of it. If something moved 15% yesterday, they're looking at it today because they want to catch the next 15%. So we just need these big runs in some of these minor stocks, and that's going to grab their attention. And then I think there'll be no looking back from there.
Chris, what would you say to this idea that maybe we're in the fifth or sixth inning of this gold bull market, timeline wise, but the action being really centered in the bottom of the ninth, where you really see that explosive phase? I mean, would you agree with that, or disagree with that, or somewhere in between?
Yeah, it's really interesting how, I mean, the market always has a way of moving that always catches people off guard. I think most people were expecting gold miners to break out first from this 7-8 year bear market that they've been in, and then silver was going to be huge, and kind of gold, big boring gold, was going to just kind of track its way higher. Well, we've had the complete opposite. Gold broke out last July into a bull market, which we traded that big rally. And miners and silver are completely lagging, but they always seem to play catch up. Usually you can't have something stretched too far without it either coming back in price or the rest of the market playing catch up and running. So I think it's loaded. I think we're bottom of the ninth, the bases are loaded, and I think everything's ready to just pop. And I think we could see some very explosive runs. It's just, there's the one wild card is, if we do go into another stock market panic sell-off, another COVID-induced kind of sell-off, is it going to pull gold and miners down with it? And I feel like it will to some extent, but I think the March sell-off actually shook a lot of leverage out of the market and has already kind of cleansed the precious metals from getting hit too hard. But I think for sure they're going to be under pressure. But as soon as there's a day of flatness in the stock market, and some easing off, I think those things are just going to rocket higher.
Chris, what's your sentiment surrounding silver then? The thesis. Talk to us about your bullishness on it, the fundamentals behind it. Do you believe in it? Do you believe it as a monetary metal, or just a derivative of gold, or industrial, or has it lost its monetary component? A lot of people feel that way. A lot of people say, hey, silver is just a commodity now. So what are your thoughts?
I think gold and silver are both an asset. I think they're a type of currency, and I own a lot of physical. I pretty much only own physical. I'll trade some of the stocks and the ETFs for short-term gains, but to me, silver has got some of the best opportunity to the upside. I really like the way it's setting up. I think we're very close to a 2010 type of takeoff where it can go from $17 an ounce to $48 an ounce over a 3-4 month period. So I think it's very close to taking off. I think everyone should own silver and gold because, again, you never know which one is actually going to take off the most. Silver typically will outperform. It typically lags, which it's doing now. So everything more or less is moving in sync. And I believe precious metals are kind of an insurance plan. I don't really buy them or invest in them for short-term gains. They're there in case fiat currencies, financial system starts to collapse. You never know what's going to happen with banking systems. It's nice to know that if property values and currencies fell dramatically, these precious metals should skyrocket and counter that, tenfold. So whatever you lost on the, physical or fiat currency side, you've gained it in that small portion, that 10% of your account in precious metals. So I see it as an insurance plan that is very cheap to hold each year to keep that insurance in place. And it has value, unlike insurance plan. It's usually garbage. It just expires. So I really like it. It's an insurance plan with the potential for big upside if we have serious financial issues.
Chris, so I'd like to ask you how you're reconciling this. And I'm asking you because I'm trying to think about it myself. And I know a lot of people are. If I was to tell you in 2019 that we were going to have a global pandemic, 3 billion people stuck at home, trillions of dollars being thrown at the system, 40 million people unemployed in the US, and, the ripple effects around the world, what would you think gold and silver would be at? And, looking at the prices today, I mean, how are you processing gold's reaction? Is it underperforming in your opinion? And is it not there yet? I mean, what are your thoughts?
I hoped it would have really rocketed higher through what we've gone through. But I mean, gold it's kind of doing its thing. It's big, it's heavy, it's slow moving. That's why I like it. It's very conservative. Uh, it is doing very well. I'm very surprised the gold miners haven't just gotten attention from the market and they haven't taken off. So that is the big shocker to me. But I'm mostly physical and I really don't trade much of anything until it enters a bull market. So I like gold, physical gold, because it broke into a bull market last year. Um, I am surprised again that they haven't really skyrocketed, but I mean, it is more of a health issue that we're seeing versus so much of a financial crisis initially. I mean, most people were scared for their lives and they were just cashing out of any asset because they were more worried about their homes, their families, their businesses, their life. So that's kind of where I think people are hung up. I think now that the financial side has kicked in, the fear of dying, I mean, it's not gone, but it's disseminated quite a bit. It's moved down. Now we're seeing the issues with all the Fed and the stimulus, and people are starting, I think, to put two and two together that central banks around the world are printing money. And so now it's a slow grind. I mean, people are talking about how much manipulation there is in gold and silver to keep knocking it down. And they don't want it to get over that 18, 19 or 2000 mark for gold, because that will just show that, the United States has kind of lost their ground and the dollar is collapsing. So there might be a lid on it. It could be being held down. I think once it breaks 2000, which seems like quite a ways away, once it breaks that, I think that's when the lid gets blown off and that's when things go ballistic. But until we break that, we're trading at resistance with gold. And you really just have to let it, time will get it through that level, I think.
What sort of upside do you believe there to be in gold in this environment? And then the follow up question would be silver as well.
Yeah. Depending on how extreme you want to go, I see it hitting $2,600 an ounce. Um, and I don't think it'd be that hard to hit, but we need to get through this 2000 mark. And I think it'll just pick up legs and really start to run pretty quick there. But that's over a couple of years. I think 2,600, it'll work its way up. I could see gold hitting, $4,500, $5,500 an ounce, but that's really extreme. And that's not the way I don't sell stuff to extremes. I kind of pick targets that the charts are actually showing right now. This is where it could go if and when these other catalysts fall into place or this continued process of easing happens. Silver, I see hitting $48, $50 very easily. I think it could hit 100 actually fairly easily as well once we start running here. So I think there's a lot of upside. Silver, way more potential than gold. But the wild card for gold is if somebody, some country or something comes out with a gold backed currency, I think that will send, or silver, it'll send that commodity through the roof like we've never seen before. So, and I feel as though there's somebody or some type of corporation kind of putting that together. I feel like there could be a gold backed currency, and people would absolutely love that, I think. And because now there's actually something behind it. Your dollar is actually worth something, right?
So you think that might be happening with countries accumulating gold and preparing to implement some sort of gold standard on their currency?
I do. And the higher gold goes, the higher the value it goes, the more it benefits the currency, because I mean, you don't need as much gold to carry as much, weight wise, right?
Mm.
So if gold goes to $5,000 or $10,000, I mean, they don't need nearly as much gold in storage because of the value swap. So
Mm.
it's got
How do you
lots of
think
potential.
that dynamic would be? And I'm just curious, now that you mentioned that, how do you think that would work out around the world? With other countries having fiat currencies, and then all of a sudden now you have this country that has a gold backed currencies. Do people just start dumping their local currencies to purchase uh, that better currency?
I kind of think they would. I mean, if your currency keeps devaluing and gold keeps going up, and that piece of paper, that certificate you have, that you would have the option potentially to cash it in increments of what, $10,000 or more, so it's worth their while. Um, I think there could be a huge benefit. People would flock from their currencies that are
Hmm.
falling in value and go to the one that has something, and it would skyrocket. I think it's a brilliant idea. I don't really know how it would fully work out, but everyone would rather have money that has real value behind it and something that
Sure.
actually could go up.
Yeah, yeah, and yeah, I guess the only caveat, because we know in history that countries can pull the plug on the gold standard, is that if you
Yeah.
have the paper, they might enact something the next day and say, "Oh, it's now not backed by gold." That would be my ultimate like concern with
Yeah.
some sort of gold-backed
Ex-
currency, right?
exactly. Well, welcome to the financial industry, right? That's it.
Exactly.
Anyone can pull the plug and you could lose everything overnight. I mean, you can't trust the bank anymore. They go bankrupt. They with all your money and your homes in it. And I mean, there's got to be some level of trust, which it needs, unfortunately, we can't fully trust everyone. And no matter what, unless you got the gold in your hand or in your vault, I mean, it's not fully yours.
Chris Vermeulen, everyone. Chris, thank you so much for coming on the show with me today. If people want to learn more about you, the work you do, the research you put out, please let them know where they can go and what they can expect to find.
Sure. Yeah. You can follow my work at thetechnicaltraders.com. And every morning I give subscribers a short video that recaps what happened yesterday, what happened in overnight trading, what's happening today in pre-market, and what to expect, what we think is going to happen with any positions we have and with the sentiment. So I kind of walk you through as a technical analyst, 100% technical, of what we're looking for with our trades in the markets. I cover gold, silver, oil, natural gas. And anytime we put on a trade, you get alert and you can just follow us. We give out the entry, the stops, the targets, and really you learn while you trade. And I mean, we did exceptionally well this year navigating the market crash and this recovery. And we're looking for some pretty big moves going forward here for the second half of the year.
Chris, I really appreciate your time here on the show. Thank you for coming on Crush the Street with us.
Hey, thanks for having me, Kenneth.